what are the main takeaways?
Like if you look at the mutual fund market here in China, it's about 16% of China's GDP. United States, it's 120% of GDP.
We just got the first GDP growth number, 5.3, quite strong.
We do think the manufacturing is stabilized, which is a good thing. We think that's a positive for the economy.
Many banks, the Western, has upgraded their outlook on China in 2024.
There seems to be a lot more optimism in terms of the outlook here.
China is trying to do it now, moving higher in the value chain.
It seems very sensible to be able to make that transition to the higher end type products, so that's a real positive.
欢迎收看《顶级投资人》，本期嘉宾是宏利投资管理总裁兼首席执行官 Paul Lorentz， 他也有一个中文名字叫罗瑞博。宏利金融来自加拿大，是一家历史超过130年的国际金融服务集团，业务覆盖全球20多个国家和市场。宏利金融旗下的全球资产管理业务都归于宏利投资管理的企业品牌之下。截止2023年年末，宏利金融旗下直接管理和受托管理的资产总额超过1万亿美元。其在中国成立的宏利基金管理有限公司是中国第一家合资转外资全资控股的公募基金公司。Paul 从业超过30年，2017年开始担任宏利投资管理的总裁兼首席执行官。这次 Paul 将公司全球管理团队都带到了中国，目的是亲自感受一下中国经济复苏的温度。Paul 本人也走进了第一财经的演播室，接受了顶级投资人节目的独家专访。
Thank you, Paul. Thank you very much for your time to take this.
Oh, thanks for having me. Appreciate it.
I was told that this is the first time you come to China after the pandemic. So what's the purpose of this trip?
Well, we have a number of reasons why I'm coming. Whenever I travel, I try and meet with a lot of our investors, some of intermediaries, government officials, but we're also hosting my management team's offsite here. And so we decided to come here because China is a very important market for us. And so my team arrived today in Shanghai, and we're spending the week here.
So far, what are the main takeaways?
Well, for us, China it's a strategic opportunity for us, and we really take a long-term approach to the market here. And for us in financial services, we just look at the size of the market and the opportunity, and we think it's tremendous, particularly compared to other markets around the world. Like if you look at the mutual fund market here in China, it's about 16% of China's GDP. United States, it's 120% of GDP. So while the market's already big here and growing, we think the runway for that is just going to continue, and we think we can help. We have a lot of capabilities and expertise from around the globe we think could really benefit local investors.
Yes, you definitely can help because, demographic change is one of the long-term challenges for Chinese economy. And how can Manulife help in this regard?
So probably the biggest is as it relates to the retirement funding gap. I was looking at some stats from the team. There's over 290 million individuals in China now that are age 60 plus. And you couple that with the fact that people are living longer, and that means individuals are going to need more money when they retire. And for us, what we're really good at globally is building income solutions, so fixed income, asset allocation, building portfolios. But the other piece is we're actually quite big in retirement globally. We think there's a lot we can really help do to help bring that local expertise or that global expertise to the local team here and to local investors.
What the business opportunity is here?
Well, there's a number of business opportunities. One is to get individuals to think about investing for the long term. And part of that is bringing some of the unique solutions that we build, asset allocation. I think the pension reform that was announced here is a step in the right direction to create that Pillar 3. We already have a number of products that have been pre-approved for that. But I think getting individuals to think about that retirement and the fact that people are living longer and you're going to need more money when you retire than maybe you think.
What is your take on China's current macroeconomy landscape? We just got the first GDP growth number, 5.3, quite strong.
Yeah. Well, we're quite bullish on China as an organization, and my local team here is also quite bullish on it for a number of reasons. One is we do think the manufacturing is stabilized, which is a good thing. We think that's a positive for the economy. We also see, the government wanting to make this transition from producing kind of lower-end goods to higher-end goods, whether that's, as I mentioned, electric vehicles, data centers. We think that's going to be a positive. And the other thing for someone like us as an active manager is the individual security selection we think is really important, particularly here in China. There is an opportunity of teams to pick the companies that will essentially win.
Looking for alpha.
Exactly. And we've got some great investment teams here in China that have a very strong track record of doing that. And so that gives us a lot of confidence that we're adding value to investors that want to be with us.
The recent economic data in China has showed some signs of stabilization, and many institutions, many banks, the Western has upgraded their outlook on China in 2024. How about you?
As I mentioned, we're actually feeling quite optimistic in terms of what we're seeing on the manufacturing front, what we're seeing. It feels like the economy is starting to turn in a positive direction. And one of the other reasons to come is to actually talk to the individuals here who are in the economy, who are experiencing it, to get a sense from them of how are they feeling. Do they feel that things are moving in the right direction? And the general consensus is yes. There seems to be a lot more optimism in terms of the outlook here, which just adds proof to some of the numbers we're seeing.
When talk about Chinese economy, you mentioned the word transforming, which is something China is trying to do now, moving higher in the value chain, new quality productive force. So do you think is that the right thing to do?
So it seems very sensible to be able to make that transition, even though manufacturing's in a good spot, to make that transition to the higher end type products, whether those electric vehicles or data centers. We think that's a real positive. One, just the types of products, the higher end products are going to drive more volume, more income into the economy, so that's a real positive. They're also going to be the ones that are going to be in demand in the future, and so positioning the economy for where the market's going, I think, is really, really important. And then there's an added benefit because those types of higher end products are also support a lower carbon and a more efficient use of economy, and so that's almost an added benefit of making that transition, which we view as a positive.
So finally, let's talk something about the world economy. What do you expect from the Fed?
Well, it's our belief that they're not going to be in a rush to cut rates. They're going to hold off as long as they can. And so we do think we are expecting rates to be pushed out. While many were expecting cuts by Q1, then Q2, we don't think it's happening until probably September. And part of that is because we don't believe the full effect of the rates have made their way into the economy, and that is going to slow down growth to a point where we think they'll actually have to cut more than maybe the market's priced in over the long term.
For the U.S. equity market, we already had the best first quarter in 5 years. The investors are very happy, but also nervous. So do you think it still has some more room to run, or has already played out?
So I do think people have looked at those gains, looked at the Fed maybe pushing off cuts, and I think you're starting to see investors maybe take some of those gains in, and you've seen markets actually pull back a little bit since the end of the first quarter. I think the question will be the clarity of when the Fed will cut. I think the markets don't like uncertainty. It almost doesn't matter whether it's good or bad. I think when they get the clarity, you're going to see growth again, but probably a little bit more moderated than we've seen in Q1. I don't think any of us were expecting that strong of a start, nor do we think it's sustainable long term.